All right, good morning. Monday. We got a new template that we're updating here on our quest to integrate a cap table three statement model to all of the startup models I've got at smarthelping.com. This one in particular is in the SaaS bundle, or there's a lot of recurring revenue templates in here. It's number 5. This one right here, we're going to give this a nice upgrade this week. Should be pretty smooth. And we're gonna get into the first initial integration today, formatting. Uh, don't forget, check out smarthelping.com for all your financial models. We've got templates for accounting, industry specific HR tools, a bunch of different joint venture cash flow waterfalls, real estate specific models. You can buy models in bulk. Just check out the financial models tab at the top. Um, by the color code key shows you the pricing for buying in bulk, or you can buy all the templates on the site for $9.99. Tons of value here. I've been building these things for almost, what are we, 6, 7 years. Um, so tons of value. Check it out. Let's go ahead, post our stream to Twitter real quick. And we'll get started. Don't forget to subscribe to the YouTube channel and like the video. That's all free ways to help support the stream. All right, so there's basically two revenue streams for security monitoring or alarm services. You've got recurring revenue because people pay you to monitor. There's some monthly fee, and you also make money on the installations of equipment. So you buy the equipment at some price, and you resell it at a higher price. So there's two main ways you make money, and I've built a lot of dynamic revenue logic and expense logic that fits that with this template. So all that logic is really good. I'm not going to do any major upgrades to that because it's working just as it should. Uh, One interesting thing about this template is it's the first one I started to do movements between tiers. And so you can get potentially negative churn if you have people moving into higher tiers over time. So you can see people upsold from tier 2 to 3, or tier 1 percentage upsold to 2, 2 to 3, 3 downgrading to 2, and 2 to 1. So the percentage each month that those things happen, it's all dynamically accounted for. And then we've got all this logic for installations, the monthly price of each of your different services up to 3 tiers, the locations added each month within each year, and the percentage of locations that fall in each tier. You got the margin of installations based on equipment costs, how many techs it takes to install, average hours to install, average hourly rate, margin earned on low, medium, and high tiers. We've also got so this margin, where is that my cost? So this cost of goods sold is assuming you're going to pay a vendor to do the monitoring and you charge the customer an upcharge on that. So that's what this is accounting for. This is your recurring revenue cost of goods sold. So that's pretty much it. I don't. So technically, so let's see. Yeah. Okay. So this is going to have inventory. We'll have to do some inventory logic. So when I pull up an import tab or a previous model that's done, I want to find one that has inventory in it already. That's not. Let's see which one would be good. Possibly the manufacturing one. Let me see. How do they do the inventory on here? Okay, so I did have this logic. Let me just check the balance sheet. Yeah, we did have inventory here. Okay, so I could probably no, because this has a ton of equipment items which aren't really relevant. Security monitoring service, you're not going to be buying equipment that you're, leasing out or anything. You might have some vehicles and other things like that, but we can fit that on a smaller one. Let me see another. Which would be a good fit? I mean, we could use this, but I'd have to just basically clear out. I mean, I could just leave these equipment purchases in here, I guess. And then it would just link up to the CapEx and all this depreciation. I could do that for sure. If you're doing a giant operation, you might have a bunch of vehicles that you need to depreciate. We don't need any of this. I'm basically just looking at the inventory logic, so it's going to be driven off of. Let me see here. So, cash flow. I think it's just basically restricted to this, and then the monthly detail. I had logic, which is referencing purchase of raw materials, so materials tab. Okay, so I basically got to put in all of this logic and then sum up the cost of goods sold. So if I go over to my security monitoring, let me see, do I do a cost of goods sold for equipment? Because it's likely you might buy equipment for based on your expected needs for the next few months, and so every couple months you're going to have some inventory purchases. And I just want to see here. So cost of goods sold, here it is. Okay, perfect. So I can just reference this and then just group those in every couple months with the other logic. All right, let's just start this on the first month. Okay, so we're good there. We're going to use the manufacturing model as a template. I mean, templates have so many different reasons why they're valuable, and it's not just the numbers. Obviously, the numbers and logic is good, but you can use it to format and use it with other things, and it just makes life really easy if you're trying to model out the startup and operations and possibly exit of a business. So first things first, we're going to have to update some of these tab names. So let's call this global control. This is fine. That's fine. So this is going to be, so these are two separate things. We'll do startup costs here. CapEx is going away because it's going to be on that new tab or new schedule that we do for CapEx. And let me look at this. So I could import here. I just have to import all this and then just make these editable so you could enter equipment. Now this is not inventory. These are fixed assets. To be clear, and possibly in the first row I always leave for potentially for a building. Actually, I don't need this. All I really need is this logic, this materials logic, and I could just change the references. I don't need this all this. Let's get rid of this template and let's try and do trying to see if I have another. Oh, product as a service, probably going to be good. It's a 10-year model though, so I'd have to delete the last 5 years. I think it's a 10-year. This is only a 5 on. Oh no, this is a 5-year. Okay, perfect. And this has inventory logic. You can see that's happening here. The amount of months or how many times you buy inventory. So this is every 3. If I were to put this to 6, you see this updates based on the cost of goods sold. Okay. So then this is good. I don't need this, but all this is good. Yeah. All right. Cap table's fine. Yep. I'm just trying to make sure I have all the modules I need. And then obviously we do have an inventory balance based on all of that. Okay. That'll work. This is actually a better fit, so we'll import this tab in. I'm just getting this ready. So we got CapEx. We're going to have a cap table. We're going to have a inventory 1 tab. Let's do oh, income statement monthly 2, 3, 4, 5, 6. Income statement annual. Balance sheet monthly. Balance sheet annual. Cash flow statement monthly. Cash flow statement annual. And we'll give these a little bit of a darker color. Now I'm using all the data I've already created with all this logic that existed, but what I'll be doing is just putting it into a more accounting friendly format, as well as adding these nice schedules. Dynamic capex with depreciation, that's going to be new and relevant. I'll have a cap table. If it's a joint venture, if you're raising money or anything like that, you can use it to cap table. We'll make a lot of the like this stuff up here is really good for controlling global assumptions about entry, potentially exit or not exit, and if so, a multiple of probably annual revenue. Probably the security services industry is usually recurring revenue models. The multiples are often based on trailing 12-month revenue. Let's see, what else do we need? So we got capex, debt schedule. Move this over here, change the color. So this is a depreciation helper, actually useful. I don't believe this is going anywhere. It's just a kind of a helper tool, and it's not really going to be relevant when I add a capex, and that has an entire in-depth logic for this. So let me just double check costs. The only real logic I'm going to change on this monthly details, I'll change the reference to the global control tab for what the end month is. It'll have to change from C5 to C6. That's really it. So right here, I'll import new data, and the end month will be in C6 instead of 5. So that's the only real update. And then obviously the other cash flow things. We won't need this depreciation. Actually, well, this can be referenced. No, all this will be on the income statement. Actually, we don't need any of this. All we really care about is cash flow, which I'll put in taxes. Will be in there. Yeah, let's clear this out. Cash flow. We'll add other cash items later. Just getting this ready to go. CapEx we removed from there. Definitely need equipment purchases. And then you see expansion revenues. So you can see on the tiers I put in what the MRR actually is at the end of each year, but then also the total essentially customer receipts would be at the bottom of each section. So we can see like the net change. Let's see, this is fine. And this section is really more relevant on a monthly basis. Like these numbers make a lot more sense on a monthly basis. I did put a customer acquisition cost and lifetime value because it is recurring revenue, so it's important to do that. And I think, did I include equipment margins? Yep, I include installation revenues too. So it's pretty in depth on those calculations. All right, so this cash flow number is fine for now. We don't need this. I'll just put a little one next to this. All right. Put a one next to that. The distributions, executive summary. Startup cost, inventory, one, terminal value. Terminal value I need to add. So I'm going to try and get all these tabs imported to the find and replace. And then try to fix anything that looks broken, and that'll be what we do today. Oh, I forgot. So the other thing I'm going to be doing is I'm going to be building a SaaS pricing tool. And I think I'll do like maybe like 10 different customer types, and you can define all the different configurations for each customer type and test out like what's your ideal customer. And that'll allow you to determine, initial cost to acquire the customer, how much you're getting per month, if there's any initial, fees collected, like startup or one-time setup costs, um, and then what's your ongoing cost to service the customer, what's the retention rate, and so you can like look at 10 different configurations with all different inputs, and you'll be able to see what, test out different things. And there's going to be a net present value calculation for each one as well. So you can kind of plan out, and also I think I'll do a lever to see if you want to collect all the cash for the contract up front versus over time. Obviously, if you collect it up front, the internal rate of return is going to be higher, but you can also see different, like, there's all kinds of ways, useful tests. So that's what I'm going to do after I finish this integration this week, and hopefully that'll be by Wednesday. Okay, here we go. So that's the global assumptions tab. We want also this CapEx. See, we didn't need a huge CapEx. There's no reason to have 100 row CapEx for this type of business when you really just are going to have a couple, maybe a building to depreciate, and then maybe, well, definitely some vehicles, because you got to run your equipment. You got to be able to do installations. So, but that can all fit onto here pretty easily. Okay, cap table. In case you're raising money from people outside, and this has slots for investors and basically outsiders and insiders, and their resulting share of the company. really happy with the way the cap table turned out. I built this one right before I started doing all these upgrades in January, and I wanted a nice tool that I can reuse for essentially any, very flexible for any use case, and this was it. I haven't actually had to change this at all. It's been very useful. All right, so we got that terminal value. And the reason why I'm modeling all of the reference points in the position is because all of the three statement models, the financial statements, which is the income statement, cash flow statement, balance sheet, all reference, the logic and references are based on these tabs, a lot of them. And then, so when I import, I want to make sure all the positions are the same, all the tab names are the same. Oh, I thought I put a one onto this. And then, so when I go to import, it all will be able to I'll be able to do a find and replace. Put this in here. Now this will have to be updated a bit, but I'll just, for now, I can paste it in. And this is going to define, oh, what the heck is that? This is going to defines how often inventory is purchased, and the amount purchased is based on expected cost of goods sold in the next n months, and defined in cell C9. So this is a little bit more advanced than what I had before on here. I think before the security monitoring service was just taking the initial inventory. I was taking the initial inventory, and then once that was paid, it was just a month to month rather than every 3 months, I believe. Let me look. If not, then it's going to work exactly the same. Here. So 244 was subtracted, and then we probably added back, yeah, 106. And then what was it referencing? Let's see. Yeah, and I think so we'll have a little bit more advanced logic for the equipment. Obviously, we're gonna have an inventory balance on the balance sheet, so that's all gonna be new upgrades for this. All right. I mean, what did we get everything? Oh no, obviously we got to do the income statements and or balance sheet cash flow. So let's paste these in. There's a monthly income statement, annual. We'll do balance sheet monthly. It's really nice to be able to work from a template that's already, especially with three statement modeling, that's already kind of got the logic. You just got to finesse the formulas to fit. But I mean, this is so much easier than building from scratch. All right, cash flow statement, and then we're going to be done with this. We'll do our find and replace, and then start fixing stuff. All right. I think I've got everything. So I already know this is not relevant here at all. We have dates for starting operations. Oh, let's, well, we could do the find and replace first, and then I'll update the formatting color coding on these. And all that. All right. So what we do for this is why it takes so much time, because now to actually remove all the workbook references from the other workbook, I just pasted all the logic in from. I just go hit there, find, and replace that with blank on the whole workbook. Replace all. Nice, 13,000 replacements. So now you can see this references terminal value D7 instead of the product as a service workbook terminal value D7. All these income statement stuff. See, now this is referencing the actual workbook we're in now. So, and that's the trick of doing this really easily. Obviously, you need a template to work from, but this is a really good way to integrate the logic. We'll have to update some things first. Okay, so before I get into all that, let's do the coloring. So this is going to be all blue text. And remember, you can hold Control and click down and highlight everything you want to change all in one swoop. So I'm going to highlight all of these and make it royal blue for the editable colors. See with this, I think I got the right shade of yellow already in here, so that's good. All right, good, good. Let's do this one. Okay, startup, yeah, that's fine. I do have a little bit of a different format. So this is no longer, we don't need any of this. We have new logic for how that's going to work. All right, we'll just hold that for a second. That's fine for now. Startup cost. So this, what would go here are like costs you spend before operations start that you need to spend to get off the ground. So this is not going to be building. If it's going to be like legal fees, maybe a website, not vehicles. That's all going to be on the capex. Marketing campaign, maybe to launch. Maybe a reserve. Computers. That would be another capex item. And then all these other, you just have, I put what, 19 slots. So zero all this out. Alrighty. That's good. This is already formatted. This is good. We can remove grid lines. Debt terms, if you're going to borrow any of your money for startup costs through a bank loan. Alrighty. Now to format I always put the columns at 15 width. And we make sure, so this is, what is this, validation 1, so we got to update that this is driving all the drop downs and everything else. So if we change this to launch date, we now should be back to normal. Well, there might be some other stuff I got. Oh yeah. So I need to replace global control C5 with global control C6. Only on this workbook or worksheet. There we go. Now we got our numbers back. So C6. Oh, and hold on. We had some formulas with 2 locks on it, which is expected. Let's replace that with C6 as well. on this sheet. All right, I think that we got them all. Yep, perfect. Okay, so that allows us to easily just switch off the template at any given month we want to, and that gives you more flexibility in doing your forecast. So it could be monthly. Oh, I mean, it could be like 3 years. It could be anything up to 5 years. And we got to update the global or the annual tab as well. Okay, so we're done with that format. Okay. Right, these are all summing up. Okay, looks good. Well, don't worry, all these errors will be fixed as we go and keep updating things. So, where was I? So, income statement, annual. Let's get this all good. And remember, this has to match the monthly income statement. So 59, make sure this is in 59. Yep, all right. Okay, balance sheet formatting. And cash flow. Now, I believe it's going to go pretty smoothly in getting the inventory logic updated because I don't think it's going to work much differently than the logic that we just imported. Awesome, so there's that. Good, let's call this company Security LLC. All right. Now, everything will be dynamic. You'll be able to update all of these different assumption tabs, the numbers and the dates and everything will update when we're done with this, including the financial statements, the distributions, executive summary, all these visuals. Oh, we got a lot of visuals on this one. And some advanced metrics as well. Monthly detail, annual detail. Let's see if we can fix a couple things. So number one, what have we got here? Why are we broken on this? H lookup, revenue D4, monthly detail 4 to 8. 4 to 8. Oh, I know why. Because we're launch year is 1 year ahead of what we had, or 2 years ahead. So let's update this. And that's another thing. If you're probably going to have different launch years than are in the default templates. All my numbers are arbitrary, so when you go and you put in your own, But if I put this to 2022, I need to go and make sure, okay, where's my start month of revenue now? Well, it should be somewhere after January 2022 or on January 2022. And that is obviously, you can see now we've got actual numbers in here for this, so that's no longer broke. And it could be any, you could have a start month like, let's say in March. And then if you look at your monthly, nothing starts until March. And then all of the startup fixed costs are also subject to that same deal. So if I would go to costs here, we can update this to just put them all in 2022. But you can stagger them, just depends on your plan, strategy, when you think you're going to start hiring people. So that's updated. We'll have, okay, yep, this all has to be updated. So validation. It's got 5 years worth of months. So there we go with that. Let's drag this all the way over for 60, 48. Okay. We could do this formula real quick. So we're going to sum up. Oh, hold on. So I did the income statement, which will be referencing I could just do it on the monthly detail. It's going to be referencing equipment. So this is equipment that you're buying in order to resell. Like, so if somebody says, okay, I want you to come put a security monitoring or alarm services onto my property, well, they might need CCTVs and all this other stuff. So you go and buy those equipment pieces from a vendor and then sell them. This is your cost on these equipment purchases. So that's your inventory of that. You're also going to have revenue when you resell that. And you can see this is installation revenue, which is looking up the amount of installs you do each month times revenue 34, which is taking your total installation cost against the margin earned. So it costs you $900. Each install you're going to charge $1,600. Now this 900 is coming from the equipment plus the labor. And if you go in, the labor is calculated by these two numbers, the average hours to take an install and the hourly rate of the techs. And there's some ancillary calculations here. This $600 is how that drives the cost, because if you go over here, where is it? If I go to find an installation revenue, I am doing 34. Or no, I'm doing 15 times 34, which is 34 is again the revenue. My cost of equipment is then taking the total installs times revenue E26, which is this here. Either of these, depending on how much the equipment cost. So that's how the cost is calculated for equipment. You've also got labor, and then the revenue is just doing it based on how much margin you want to make on this cost. So if you make $1,600, cost you $900, you're at a 45% profit margin. If you want to make 80%, well then you're going to charge $4,500 for this, and it's going to cost you this $900. So you could update these margins however you think, whatever you think you could charge. There's going to be a lot of analysis that goes into that. But it's very nuanced, very good logic here. Very good logic. So if I go back to the inventory, I can sum up this equipment because this is the only thing really hitting inventory. There's no other things that hit inventory. So I want 106, sum 106. And some, let's see, what did I have on here? Okay, yeah, so I thought this was a different formula than the first cell. Okay, so this is fine. So this can be sum up inventory or monthly detail, total equipment. If the month number 3 is less than this. So 6 months worth of inventory to buy it up front is 309,000. That lasts 1, 2, 3, 4, 5, 6. Then I got to buy again here. Now, let's think about this. What happens if our start month is not month 1? Like, what if we start in month 6? Well, that's fine. So here, let's say it's month in June we start. So what's going to happen is if we go over to our inventory now, only 77,000 is coming into the initial inventory purchase because there's only operations in June, so we only need equipment for 1 month. And then we'll run out, and then we got to buy for these next 6 months. So 1, 2, 3, 4, 5, 6. So then we've 464,000 will show up in as a purchase for July. Now I need to update this actual calculation. So let's do this. So we're summing up equipment. And make sure, so January is in A, B, C, D, E. Okay, in January is an E there, so I should, nope. So we need to lock this. So E to BL, and let me make sure this is E to BL. Yep. All right. And all this other this is just logic to figure out the interval, like every 6 months or 5 or whatever. So shoot, what did I say? E to BL. And that's got to be locked. And that's already locked. Okay, let's try that. That should work. Perfect. So there's your 464, and then depending on your assumptions of growing, doing more installs, or however your plan is, this will all update. So this will define your actual inventory value. So you buy this, so your inventory goes up by this amount, and then it goes down as you use it. Now, since we don't use it till June, this inventory value is just going to be 77,000 for the first 6 months, and then here will go to 0. Here we'll go to 464 minus whatever we use in July, and so on. And that's just how it works. Now this would probably be like 3 months in reality. Every 3 months. And since we're not even having any operations in the first 3 months, there's no purchase here until April. Okay, good. So that all makes sense to me. Let's give this row, since it's the only important row to look at, a little highlight. We'll be using that. All right, so inventories, all logic is good there. We'll have to reference that in our financial statements. Oh, ooh, this is a good one to do. So debt schedule, we want to make sure on the end month, if we have chosen to include a terminal value, we also need to then reduce any debt that's owed on that end month. So we take this logic here, we put it here. drag this down. This now comes down here. This reference is going to say if yes, give us the end month, whatever that might be, otherwise NA. And now you'll see if we, let's update the debt. So debt amount is going to be 250. So now on the end month, you can see the debt's paid off. So that'll come right through the principal and interest schedule like this. Perfect. Depending on whatever your first payment date is in the end month. And if this was, oh, we got to put a validation on here. Let's say it was October, you go back to debt schedule. Now you can see it's paid off in the 56th month, which is October 2026. Put it back to December for now. All right, this is fine. That's good. This is good. Updated that. That's fine. This, we'll have to update this at the end. CapEx is good. Inventory is good. Debt schedule is now good. Terminal value, we'll have to update that tomorrow. All right. Well, we're looking good here. We're looking good. Just trying to see if there's anything else that's really broken that I need to fix. Tomorrow we'll go through and I'll actually update this income statement to match what's going on with this business and all the references, as well as balance sheet, cash flow statement. Hopefully I'll finish tomorrow. The only kink in the chain could be the terminal or the inventory, but I think it's going to go pretty smoothly. We'll update that. We'll update this. Visual should all just update as everything else gets changed. Let's do a check here real quick on the annual detail. So this ending cash position. Oh, wait. Monthly 254. So we might not be able to check this off until tomorrow. If there's a big, let's see, what is our div error equipment purchases? Oh, actually, we could do this right here. So there's the timing of that. And then, what else looks messed up? The cash, the exit value. So C6, yep. Then, wait, then we want C, hold on. This is irrelevant for right now. Let's just clear this out. We'll have other logic to figure out the terminal value when we update this. Okay, so this cash position here, 3,124,000 minus the monthly should match. Okay, good. So nothing weird is going on there. It'll be more important when I add the additional cash items that are going to happen. So that's good. All right. I mean, we're looking really good here. I feel like tomorrow we should be able to finish the whole rest of the update for this model, and then we'll get into that SaaS. Like I said, after I finish this, the other template I want to do this week is one that's from scratch. That's a SaaS pricing configuration tool. Basically allows you to model up to 10 different customer types and figure out like what you're going to charge for them, what their retention rate is, all different logic that has to do with SaaS customers, and you can kind of see what is optimal um, for your situation. So I'm excited to build that out. That'll be really useful for essentially any business that's a SaaS whatsoever. Um, and we're just gonna keep moving and grooving along. I'll see you guys tomorrow morning at 10 a.m. We're gonna do the same. Finish this update on the security system alarm services company. Uh, yeah, I'll see you guys on the next one.